Hi everyone, Jeff Yastine here. Make sure to send me your emails or comments. My address is jeff@yastine.com. And of course you can follow me on Twitter and on Facebook as well. Well, I knew we would eventually get to this point. As the stock market has risen and risen and risen still further, it's fueled a lot of well-earned optimism as COVID vaccines are distributed around our country. But inevitably, everybody wants to know, are we in the middle of an investing bubble or not? So here's my answer. Yes, I think so. On Google Trends, searches about a stock market bubble have been trending steadily higher in recent months. On CNN's Fear and Greed Index, which is a measure of optimism and pessimism for the investing public, it's in the extreme greed range, which is what you'd want to see if you're expecting that we are in a bubble, though it's certainly not that you have to have one to have the other. And certainly last week we saw with IPOs like Airbnb, which more than doubled in its first day of trading, likewise questions about whether the market is in a bubble and in a dangerous position. So the short answer in my opinion is yes, I think we are in a bubble. Certainly where it comes to tech stocks and those stocks that have already benefited enormously during the pandemic. It means risks are rising. It means that we have to be careful as investors and speculators, but it doesn't mean run for the hills. It doesn't mean sell everything. It just means that the potential to lose money is rising, to lose money fast. But we also have to be realistic in predicting the end of these things. And the idea here is that real bubbles can go on far longer than most people realize. And let me explain what I mean by that. In the real world, a soap and water bubble is a thing, an event. We inflate it in a few seconds. It's here for a few seconds. It pops in an instant and it's gone. And we know exactly what it is at the moment of creation, and we know exactly when a bubble ceases to exist, of course. In the financial world, a bubble is none of those things. A stock market bubble is a process. It's a series of many events that build and build over a period of months. And most importantly, we will not know, except in the rearview mirror, when a stock market bubble has well and truly popped. But I think there's value in asking and answering that question about a stock market bubble. It's sort of like being lost in the woods. If we can remember to look for a few reference points, however vague, a fallen tree, the view of a particular mountain, through the trees, we still may not know exactly where we are, but those reference points help us to navigate back to the path again. People define bubbles in different ways. Now, when I think of a bubble, I think of 1999 and 2000, certainly a classic bubble if there ever was one. The NASDAQ rose 75% in 6 months' time. The Russell 2000 stocks rose 50%. Just like now, there were plenty of crazy priced IPOs. People were happy to pay ever higher valuations for the very best stocks. And the fastest rising stocks were really ideas for a business rather than an actual business itself. So stop me if all this doesn't sound familiar to you. Now, I was a financial journalist by day and a stock market researcher at night back then. And I can tell you, there were plenty of people publicly wondering about a bubble. Yet anyone speculating in stocks at that time had plenty of reasons to disregard that advice until it was too late. Again, stop me if this doesn't sound familiar. At the start of the year 2000, the NASDAQ fell 15% in a sharp 1 week long correction. Was that the end of the bubble? No. Over the rest of that month, the NASDAQ hit new all-time highs. Then it fell 15% again in a few days' time. Now, surely that was the end of the bubble, right? Wrong. Instead, the market turned around and soared nearly 40% over the next 6 weeks. So this is what I mean when I say that real bubbles can go on far longer than we realize. And we have to make sure we understand that as we go through the process. The NASDAQ hit its all-time high on March 10th, 2000, a record that would stand for the next 15 years. Even then, after a 10% sell-off, there was yet another 2-week rally that almost equaled those old highs before the index fell like a rock. It dropped almost 40% over the next 2 months. Of course, we know the rest of the story, but again, that's only because we're looking in the rearview mirror. In fact, by Labor Day, the NASDAQ had rallied all the way back to the starting point at the beginning of the year. And you can still find articles written at that time in which Wall Street strategists still expected the NASDAQ to rise even higher and hit yet new all-time highs once more. So that's just my brief point here. Are we in a bubble? My gut instinct tells me yes, I think so. And we shouldn't let ourselves be blinded to that idea. But we should also acknowledge that the stock market could cover a lot more ground higher before this bubble building process plays itself out. Just something to keep in mind as we move forward here. Use it as a reference point. We'll see whether or not my gut instinct turns out to be right or wrong. I'm Jeff Yastine. If you like what I'm talking about here, make sure to subscribe to my YouTube channel and follow me on Facebook and Twitter.